What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll be looking at weekly charts of all of the indices, the VIX and Bitcoin, and we have now been selling off for 7 consecutive weeks. Meanwhile, on Friday, the S&P 500 was temporarily in bear market territory, drawing down over 20% from the previous all-time high. So first up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so on the SPX, we are looking at a zoomed out view here, and we can clearly see that we are breaking from an uptrend into a downtrend, and we are very clearly making weekly lower highs and lower lows. Now zooming in here, the number one thing you need to pay attention to is the SPX is now starting to break down below about 3930, which is that very critical support line that goes all the way back from the bull market of 2009 when we hit that bottom and started to rally. So this is very clearly a major shift in the stock market because we are losing all of that bullish momentum and we are starting to build up a lot of bearish momentum. Another way you could see that we have a lot of bearish momentum is if you connect the lows, we do have this sort of head and shoulders looking pattern on the weekly chart, and we are now 2 weeks below that neckline. So there is a lot of bearish price action and there's obviously a lot of bearish momentum, and this is a very strong downtrend now selling off for 7 consecutive weeks. And I will tell you, there is nothing that says week 8 has to be bullish after selling off for 7 consecutive weeks. If you look at the data, it's not until week 9 that things start to look rosy. And typically if you sell off for 8 consecutive weeks, you get a very strong rally on week 9. So with 7 consecutive weeks, we can't just say we are way too oversold and we need to bounce in week 8. But it is very likely in week 9 we will see a strong bounce. So that is something you will want to pay attention to. Now, while we're trading below SPX 3930, it is very likely that we're trending down towards 3700 or just below 3600. That doesn't mean we have to get to those lower prices, but as long as we have bearish price action and a bear trend, we do want to have downside price targets that we're paying attention to. So 3700 and 3588 will be those downside price targets, but also notice that we are getting very close to the bottom of this channel, which does mean we could get a counter trend rally. And more than likely a counter trend rally at this point would take us back up to 4100 or 4200. In an extremely bearish scenario, if this is way more than just a deep correction, we will see SPX getting rejected around 4200 and then making that next leg lower. And we're getting a lot more bullish if the SPX can break above 4200 and make that level a support level. So the bulls really need to drive price action all the way back above 2 resistance levels, break the downtrend, and then claim that resistance level at 4200 as support. Otherwise, we are going to remain bearish and continue to expect lower prices. So I always say it's a downtrend until it's not. So try not to get overly bullish unless you're accumulating for the long term, because as a trader, you need to respect the fact that all of the momentum is to the downside. So you should be expecting lower highs and lower lows until the bulls prove something with the price action. Jumping over to the bear bull survey, you can see that we're back to that 50% of the people that are still bearish, and we now only have 26% of the people that are bullish and 23.6% are neutral. Remember, in a very extreme market that is this bearish, there is nothing that says this survey has to reverse the price action immediately. You're looking out about 6 to 12 months from the time the survey becomes overly bearish to start expecting higher prices. So in theory, if you want to be a bullish contrarian, if you start accumulating at these levels, you would assume that 6 to 12 months from now, you would have a very nice return on your investment, even though it doesn't guarantee anything. Remember, as Warren Buffett always says, you want to buy when everybody else is fearful, and that's exactly what this survey is telling us, with everybody being fearful now for over 4 weeks, and we continue to see high bearish sentiment. As you can tell, we continue to sell off now 7 consecutive weeks in a row of selling. So as you can tell, the survey did not guarantee that we had to go higher just because it's getting bearish. So keep that in mind, that if you're using this survey to be a contrarian, you are looking out no less than 6 months, and more often than not, you're looking out at least 12 months or more. On the NDX weekly chart, just starting out with the zoomed out view, as you can very clearly see the same story as the S&P 500 breaking the uptrend and very clearly going into a downtrend. And we are now sitting at the support trend line that goes all the way back to the bottom of 2009. So the S&P 500 is just barely below it and the NDX is now just getting there. So we could be finding some support here in the tech sector based on that trend line. The most reasonable counter trend rally would take us back up to about 13,300, and then we would expect to see bears stepping back in, trying to form another lower high before another lower low to continue to drive prices lower through the summer. Now, if the bulls can get back over 13,300 and make that level into a support level, then we can start saying that the bulls are showing signs of strength and we could be reversing the bear trend. But keep in mind, these are downtrends until they're not. So even if we do start to bounce on week 8 or week 9, And when we come back up to resistance, we are not necessarily expecting the bulls to break through these levels until the price action proves it. Make the price action prove everything to you. Don't go against the trend for any prolonged amount of time expecting this to be the bottom, because you never want to try to call a bottom in a bear trend. Just like you didn't want to try to call a top over the last couple of years when we had a strong bull trend, there is no reason to try to guess where the bottom is going to be. That doesn't mean you can't accumulate long positions, and that doesn't mean you can't take long trades. Just don't be getting greedy with long trades, lock in your profits, and don't just expect this to go right back into a bull rally. We are clearly making lower highs and lower lows, and we have very bearish price action selling off for 7 consecutive weeks. And if you look at years that we've had price action like that, it goes all the way back to 2001, 2008, and 2011, and those are not years that we were very close to a bottom. So do not just think because we are selling off this much that we are due for a very strong bounce that has to send us back into a bull market. If you look at history, it's actually comparing to other years that had much lower prices after we saw bounces. So try not to get overly greedy with long positions, or try not to get overly greedy with swing trading in the long direction. We could go much lower, or we may have already seen the bottom. We are not going to know until price action confirms it. So right now you need to go in the direction of the trend and expect lower highs and lower lows. The next bearish breakdown in the NDX will be a breakdown below about 11,500, and that will very likely take us to the next leg lower right around 11,000, so that will be the next support level you want to pay attention to. On the Dow Jones weekly chart, we're starting to break out of the downtrend, and we did break down below the support trend line, and we're very likely still heading down to that price target right around 30,000, and it does look like we could get there in the month of June. That does mean we could see a bounce in the short term and make a lower high before we put in that next lower low. But right now it looks like the Dow Jones is trying to trend down towards that price target at 30,000. It'll be looking a lot more bullish if the bulls can get back above 33,000 and reclaim that level as support, because that is the trading range that we did break out below, and that is what is sending us for that measured move lower. So the bulls need to get all the way back above 33,000, otherwise the bears are going to continue to drive the Dow Jones down to about 30,000. As you can tell, all of the indices are in very strong downtrends, so I continue to warn you not to be getting overly bullish in a downtrend. On the Russell 2000 weekly chart, we did hit that price target 2 weeks ago at 1700, and we did start to bounce from there, but we are still closing the weeks lower and we are still printing red candles. So from here in the Russell 2000, we could start to counter trend off of 1700, or we could retest that level to see if the bulls are still buying. Otherwise, we're going to break down through that level and come down to about 1578. If we do continue to get a counter trend rally from here, you're looking for a retest of the breakdown right around 1960. And if we get rejected from 1960, that will be extremely bearish, and that will be another lower high. And then we could go for that next leg lower down here at 1578. So as you can tell, these are very strong downtrends. And even though we are bouncing off 1700, we still have a lot of bearish momentum and a strong downtrend. So it doesn't mean that we cannot continue to go lower. So you still need to be respectful of the trend and the bearish price action. On the VIX weekly chart, you can see that the VIX is still struggling to break out and hit that price target at 38, and we are seeing the VIX closing below 30 for 2 weeks in a row. So the VIX is still elevated, so we're not getting any bullish signals from the VIX until we get back below 24 and start closing below 20. So you still need to be cautious while the VIX is elevated, because this is still a very volatile market. Now, if we get another spike lower and we see volatility spiking towards 38, that could historically mark that we did put in a temporary bottom and we could be due for a very strong rally. But right now, the VIX is just hanging around 30 and not giving any clear signals in either direction. The VIX above 30 is a sign to be extremely cautious of another leg lower, and the VIX crushing down below 24 will be a temporary bullish signal. So watch the VIX closely and know this range is very volatile, so continue to expect a very volatile market. On Bitcoin, we're currently trading around 29,000, just below 30,000, and we are still holding above that support level at 28,000, which is a very critical support zone. If we lose support at 28,000, we could retest this low at 25,000, but we will more than likely start trending down to retest the previous high at 20,000. That's more than likely going to be a very strong support level for Bitcoin, but I still have a feeling that Bitcoin will find support at 28,000 before attempting to retest resistance right around 36 to 37,000. And if we get the bullish breakout, that means we have to get all the way back above $40,000. So Bitcoin above 40,000 will be looking more bullish, and you're looking for a bounce off 28,000 and a retest of 36 to 37,000. Otherwise, you're looking for that next leg lower down at 20,000. As you can tell, Bitcoin has very clearly hit a top and going through a bear market currently. So we are not getting bullish until we see a breakout of the resistance trend line and we start making higher highs and higher lows. On the ARKK weekly chart, we're going to switch over to a log chart, and we could very clearly see that ARKK is still below our support trend line and still waterfall selling down into capitulation. This is not an ETF that I would be investing in for the long term because there's no guarantee that it ever has to go higher again, and this is an extremely strong bear market. If you're waiting to get bullish, you want to see price action reclaiming the 50s and you want to see higher highs and higher lows. But so far, we continue to see a very impulsive sell-off. So jumping back over to the S&P 500, this is going to be a very critical next couple of weeks because historically, we have never had 9 red weeks in a row and we are coming into week 8. So if we get one more red week, we are very likely going to see that counter trend rally. But obviously, there are never any guarantees in the stock market, so you still need to watch these critical levels. The number one level I would watch on SPX is right around 39.30, and below that level, I would continue to expect lower prices. And if we can break back above 39.30, then you could start getting more bullish in the short term. But remember, as long as we have a downtrend, you are expecting lower highs and lower lows with a very strong resistance zone right around 4,200. So respect these levels and understand if you're following price action, you should always be on the right side of the trade and you should be just fine trading in any market condition. It's not until you start ignoring price action and ignoring the signals that it's giving you that you are going to get destroyed in this market. So try not to get overly bullish in a downtrend and try not to get overly bearish when you're sitting at strong support and getting oversold. There's a fine balance and discipline and patience that you need in trading, and as a long-term investor, just continue to accumulate at very critical support zones, and as you know, time will do the rest for you. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank Trade Alerts beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.